What is going on, everybody? We are back again with another video, and in today's video we will be doing a trade breakdown on a long position that I took on Solana, and I will be using, like always, my view on external range liquidity and internal range liquidity with time frame alignment. And the prop firm that I used to take this trade on was Breakout Trading. So like always, what I like to do is start off with a naked chart, and we have the daily on Solana. So if you want, just take a few minutes and mark up your annotations, and then I will be showing mine as to what I have in the next slide. So what we have here is I have two dealing range marked off from this swing low to this swing high, and then as you can see, price is just slowly but surely more so consolidating, but on a slow decline as a retracement down into discount of this daily dealing range. And eventually what we were doing was just generating liquidity, and we had relative equal lows here, and price dropped, taking out this external range liquidity into this daily internal range fair value gap in discount of this swing. And what did I say in my previous videos in regards to external and internal range liquidity? When price takes out external range, the first thing that it's going to do is react and retrace and reach into internal range liquidity pool. But in this case, we had more so of like a double takeout, tagging internal range and taking out external range liquidity. So my first immediate draw and like a low-hanging fruit objective point for me was this internal range liquidity pool resting in premium of this swing. So that is what I used as my take profit and my objective for this long position. Now, since we have our reaction also off of the daily internal range and external range run, we drop to our hourly chart to look for the reaction and frame a market maker buy model off of that internal and external range liquidity pool reaction. So what I have here is the price point when we reached into that daily internal range liquidity pool. And if you look closely, you see a swing high that was set here after we tagged the internal range liquidity pool. And after we closed above this swing high resting here, I'm labeling that as a potential shift in market structure. Now, as you can see, what price did, if you look at this from a fractal standpoint, we took out this external range high, we closed above it, labeling our market structure shift. So this area of price here, the tag of the daily fair value gap in discount, the internal range, this would be labeled as our smart money reversal. So this could be your first entry long off of that market structure shift on the hourly. But personally for me, I wasn't able to capitalize on that long position. I actually did execute there, but I did close the position early. So what I did was I was able to capitalize on a further move. So I waited for price to push up higher. We closed through this hourly bearish fair value gap. So now we can label this as an inversion. And on top of that, we created a hourly bullish fair value gap that price traded down into. So I used this as my entry to go long with a stop loss below this swing low resting here. And as you can see, as price moved up, I believe we confirmed our interest to move long. We had closures above this swing high, which we could use as a mitigation block. And I also shared a diagram as to how I view price when we reach these higher time frame external and internal range liquidity pools, and then we have our proper time frame alignment. But I will be showing that diagram at the end of this video. But you could see that price was accumulating and then sweeped this short-term low here, creating an intermediate term low. If this would be of preference to you, you could use this as an extra entry point if you would like to pyramid into the long position, since we still haven't reached premium of that daily range, and we're still trading inside of this down close candle, this mitigation block. So this could be another potential point for to pyramid. And you could even see the reaction off of that intermediate term low formation. We have a short term low to the right of it that tags this hourly gap, and price closes above this down close candle. This was also labeled as the manipulation leg that took out liquidity, this short-term low, and then broke structure up higher. We have a hourly bullish fair value gap that is labeled as reaccumulation. So this technically would be labeled as your silver bullet entry. And you could see from this point on, we just had smooth delivery to the 2 to 2.5 standard deviation point, the daily internal range liquidity pool draw that we had in premium of that daily dealing range. And like I was saying earlier, you can clearly see, even though we reached that internal range liquidity pool that was resting in premium, that was our low-hanging fruit objective point. So I closed my full position here. But we did reach this daily internal range liquidity pool, and the next swing high that is labeled as our external range was the dealing range high. So you could still see that price reached that external range liquidity pool objective point after we reached this internal. So we had a two-way side move of this, price taking out the relative equal lows external range, reaching the internal range liquidity pool daily discount of this dealing range. So price had an internal range premium draw and an external range draw liquidity to the dealing range high. So as you can see to my left, this was my MetaTrader 5 for my executions that I placed. And like I said, I did take an execution off of that first initial low risk buy with the closure above that hourly swing high that I labeled as our low risk buy. But I did close it prematurely, and I did execute on the next position with the confirmation of that inversion gap with the next tag overlapping with the hourly bullish for value gap. And then I did the same thing on the next hourly gap that formed, and I held that long position all the way to that daily internal range liquidity pool. And if you look to my right, you could see that this is a diagram that I made based off of the framework of that trade exactly. So we had the daily external range liquidity pool, but also aligned with a daily internal range liquidity pool tag. So after we had that reaction, I have a note here. You drop to the hourly chart to wait for the shift in structure based off of the daily reaction. And that's what we had. We had a closure above a swing high. And then price drops into that POI like I labeled here. And as price moves on and we continue, we have mitigation blocks that support price, and you see PD rays form inside of. And then we have reaccumulation continuing with mitigation blocks as well, drawing into this higher time frame internal range liquidity pool on the daily chart that was lying in premium of that swing. I will continue to post trades that I take when I find easy and simplistic views of external and internal range liquidity pools as draws, and framing market maker sell or buy models off of those reactions. And the more you see it, I promise it will become so easy and simplistic, because there's not much to this strategy. You could use it through a fractal standpoint, you could use it through a swing trading standpoint, and a high frequency scalping standpoint. I have this diagram listed on my Instagram, and I'll have that pinned in the description of this video below. Also, just for extra interest, if anybody is open and would be talking about one-on-ones, I know I'm getting countless DMs about it, but I have openings for the month of February. If it is of interest to you, I will have the link to that as well in the description of this video. But the whole concepts and everything that I've taught about here, it's all because of the MMXM trader. Again, I always give him props, but credits to where it's due. Taught me everything, my private one-on-one mentor, and these are based off of his teachings in his course, so I'll link his socials as well. I hope you guys all have a great rest of your week. Good luck, good trading, and for the rest of you, I will be streaming again on Wednesday night, the day of this video upload that night. But take it easy, guys. Be safe, and I'll see you guys again in the next video.